Boom. All right, what's going on, you guys? It's Royce Jacob, and in this video, I'm going to talk to you about where I believe the stock market is going next. I'll give you a hint right off the bat. It's lower. Okay, so I first want to preface this by saying that when I say next, I'm not talking tomorrow or the next day. I'm talking 3, 6, 12, 24 months out, okay? So that is how I'm personally perceiving this market right now. I'm not paying attention to the day-to-day just because it's far too erratic and irrational. So we're focusing on the long term. In my personal opinion, that is a safer way to play. I also want to preface this by saying that this is only my personal analysis. This is just my opinion. I'm not Nostradamus. I can't tell you exactly where the market's going and when. Nobody can. I'm just using the data and information that is available to me to make the best decisions and predictions that I possibly can. Okay, so let's get into this. First, we'll go over the general topics we're going to cover, and then I'll dive into each one in more depth, okay? So the first is this great fractal chart made by an individual named Bitfink on TradingView. So this is a fractal. So it's pretty much just today's current chart of the Dow Jones Industrial Average, which pretty much sums up the entire stock market, right? And it's overlapped with the chart from the Great Depression back in 1929. Okay, so that's the first thing we're going to cover. Then we're going to go into a chart of that Great Depression, or of the Dow Jones from the Great Depression, looking at it a little more closely, just because I want to show you guys kind of what I think, or how I think this correlates to today's chart, in my opinion. Then we'll get to some fundamentals. We're going to talk about Mark Cuban's take on the fundamentals of the markets right now. And then we'll get into the final subject, which is the Q2 earnings that are coming up later this month, which I think will be a pivotal they will play a pivotal role in the market's performance come the end of the month. All right, so first things first, let's get into this fractal. This is a great fractal. I love this comparison. And again, this is today's Dow Jones Industrial Average chart, which is this colored one, overlaid on the 1929 to 1930, like 33 or 34, I believe. Yeah, 33 Great Depression chart. All right, so again, this colorful one is today. The shadowed one is 1929, so way back in the day. All right, and my take on this, as you can see here, when that initial drop happened back in 1929 in the Great Depression, there was this bounce right here. All right, and this bounce actually lasted from the bottom from the 4th of May. Or no, sorry, actually I can't, the dates aren't on here, but that lasted a while. Okay, and kind of what I wanted to get at with this is that the Great Depressions lasted 4 years. The market decline lasted for 4 years, okay? And I don't think that will be the case at all today. And I'll tell you why. It's because society as a whole has come such a long way technologically. Information spreads faster. Everyone's trading on their phones. Everyone has access to everything at the touch of a button, right? On your phone, on your iPhone, whatever. And they didn't back in the day. So that's why I think that the Great Depression lasted for 4 years, just because things were so slow. Granted, it was a wartime. There was very significant things going on, but market performance, as we know right now, doesn't always directly reflect the fundamentals that are occurring at the time of the market decline. Okay, so what I think is going to happen is you can take that 4 years that the Great Depression saw and cut it in half. So pretty much speed it up 2 times, because again, we've come such a long way technologically. Society's come a long way. Everything just happens faster. So I believe that the market will correct faster as well. I think this crash will be faster, and I think the way back up will be faster too. But right now we're focusing again on this crash that I believe, to sum it up, will take 2 years. Okay, so I believe the market will be steadily falling and in a bearish trend for 2 years. Okay, so again, divide the four in half, and that's 2. So the Great Depression took 4 years. I think this 2020 COVID crisis, market depression as well, will last 2 years. Okay, so I wanted to show you guys this. Again, this is the Great Depression chart, and I just kind of wanted to show you guys what this looks like. So this is a monthly chart, and you can see when the first crash happened back in 1929, it went down for 3 months. So today it went down, the Dow Jones went down in 2020 for a month. okay, for like a month and a half. And then it came back up in 1929 for 4 months. I think it wouldn't be crazy to see the Dow Jones slowly climb back up for a month or two. It then went down for 8. I wouldn't be surprised if in 2020 we see it for 4, okay, and so on and so on. And that's all I wanted to show you guys here. Just again, because I don't think that this will last 4 years. I think that we're far more competent as humans now. And again, things just happen faster. That's kind of what I really want to reiterate here, is that things happen faster. I don't think that this 2020 crisis will go until 2024. I think it will probably go until 2022, with the majority of the pain happening within the next 6 months. Okay, so I should say 6 to 12 months. I think by the end of summer is when we'll see things probably approach a pretty bad place, and the most declines will happen by the end of summer. Again, my personal opinion, keep that in mind, guys, as well as with everyone you watch in the market space around these times. Okay, just always remember, this is just our personal opinions. All right. Okay, so that's the technicals. Again, there have been many of dead cat bounces in history. We'll go back to this quick. That's his caption: many dead cat bounces over the years. And that is these little bounces, if you're not familiar. That is after a great decline, after a significant crash, there is always that little bit of optimism that will cause the market to believe, oh shit, I missed out, or buy low, sell high. The classic buy low, sell high, that's bullshit right now. I hate that because this is such a classic dead cat bounce. You've seen this over and over again in history. And that's why charts are so important. It's not just the chart itself. Obviously, I'm sure you guys know that. It's not just the chart. It's the psychology. It's market psychology around scary and emotionally draining times, like the Great Depression, like right now with the COVID crisis. Okay, scary times. You're looking into the psychology of the market, not just the charts. The charts are a good representation of market psychology and general consumer sentiment. Okay, so that's why we look at charts, and then we'll get into the fundamentals now. So billionaire Mark Cuban, this is a Market Watch article, should say that. Credit where credit's due. So the title is Billionaire Mark Cuban Explains How Stock Market Bears Feel About Bulls. And I quote, I don't think they're really factoring in what they're going to see on the other side of coronavirus. Okay, and Mark Cuban, obviously a very competent man. Very great entrepreneur, great investor. You know him from Shark Tank, but he's also the owner of the Dallas Mavericks. He's a very accomplished individual, and he's been a very vocal and rational voice in this time. And I think he's setting a real good example for how people in power should act around this time. So if you haven't watched any videos of Mark Cuban, I would recommend you look at some of his interviews, because again, he has just a very good, rational, respectable take. Okay, and what I want to say here, because Mark Cuban is currently bearish on the market as well. In this article, I'm not going to go through it completely. You guys can read it if you want to. Again, it's on Market Watch. You'll know how to find it. But he goes on to say that he doesn't understand why the market's rallying right now, because the fundamentals have not changed. And when he says, I don't think that the people who are optimistic right now, while it's great to be optimistic, it's just unrealistic. Because on the other side of this, even if people, society will come back inevitably. People always come back. I'm optimistic long-term on the human race. We're a powerful, resilient species, and I believe we will come back. It's going to take a long time, and it will not be the same. You guys, times have changed forever. This is so emotionally scarring to people, what is going on right now, that things will never be the way they were at the beginning of 2020 and 2019, 2018, etc. Things have changed forever. Consumer sentiment has changed forever. People are gonna operate with another level of scarcity, another level of fear. They're gonna second guess just buying bullshit that they may have bought in the past. Again, it all comes back to consumer sentiment on the other side of this. People and psychology is changed forever, and I think that's what Mark is saying here, is that the optimists don't realize kind of that side of the argument come on the other side of this market, okay, or this crash. And that is really what people just need to understand, and why I definitely don't think the markets will make a V-shaped recovery. It will be a U. Again, the markets will come back long-term bullish. I believe in the U.S. I believe in the humans as a whole. I believe in our world, okay, but this will take a long time to recover. I don't think we'll see levels that were that match previous all-time highs for years. I think that will take probably like a decade, in my opinion. I don't think we'll see early 2020 highs for another decade. That's just me. Again, I can't reiterate that enough. But again, things will take time. Consumer sentiment is forever changed, and that's just really the argument that I'm making in my own mind, is that consumer sentiment has changed. The way people act is forever changed, and that will reflect in the markets over time. Okay, and I'll let you guys know again. Over the past couple of days, the markets, the S&P, the Dow have been up. But again, that is, in my mind, still part of this dead cat bounce and a bear flag that we're playing out. I went over what the bear flag pattern was in a previous video, so you guys can go check that out if you want. But again, there's a lot of technicals that are pointing more to the downside, and the fundamentals are for sure pointing down to the downside. So I think the catalyst for the further downward trend later this month, so late April of 2020, will be earnings season. So Q2 earnings season. This is the first earnings season where all these large companies, Apple, Amazon, etc., are announcing earnings for the quarter directly impacted by the coronavirus. Okay, so the title of this is Apple schedules Q2 2020 earnings released for April 30th after confirming it won't hit guidance. Okay, so I'm not going to go into this article. Everyone just knows Apple. It's the largest cap company in the world. So everyone knows Apple. They've just released the news that they will not hit guidance, and they're completely wiping out guidance for the rest of the year. As is Starbucks, as is so many other large companies are announcing that they're for sure not going to hit earnings. Supply chains are disrupted. They're not even going to give any guidance for the rest of the year because no one knows what's going on. And yet the market's still going up. This doesn't make sense. Again, that's why the day-to-day is so stupid in my mind, is because none of this is rational. None of this makes sense. This reminds me of The Big Short. I actually just watched The Big Short last night, where they're driving around. You guys need to watch Big Short, especially right now, if you haven't seen it. Great movie. And watch it again. It's been a couple of years since I watched it. Even better the second time, because it's so damn appropriate right now. Okay, so it reminds me of that scene, if you guys have watched it, where Steve Carell and his boys are driving through Florida, looking at all the houses for sale and the people who own the houses, and it's just so fucking obvious that everything is so out of whack, and it's such a bubble, and it's not at all reflecting the market is not at all reflecting the reality of what's happening, and that's how I feel it is right now. And so that's why I'm saying the catalyst to the further downward momentum after this dead cat bounce, after this little relief rally that we see right now, is going to be later this month. So in a few weeks, when these large companies release earnings and say that there is no earnings. We're not earning shit. And I think obviously Apple's still making sales, but it's not at all going to compare to what previous earnings have been. And again, guidance for the rest of the year is completely wiped out. So I mean, things are going to be bad for the near future as far as actual fundamentals are concerned. But again, stay optimistic, guys. I really want to reiterate, optimism is very important. I'm just being a realist right now. I do believe in the future of humankind. We will come out of this. We will stay strong. We will be stronger on the other side. We'll be different, but we'll be more resilient. All right. I think this is good in a sense. You can look at the bright side of this, is that it does make us more resilient as people. It builds character, okay? Hardship builds character. Always remember that, and whatever you do, that's just kind of a good life lesson overall. Hardship builds character. Always find the silver lining in shitty times like this, okay? So let me know what you guys think about this. Let me know if you argue this. If you are an optimist, please let me know why. And if you believe in this or have any other things to say or any reasons behind what I'm saying, please share that as well. All right, so yeah, drop a comment down below. I always love talking shop with you guys. I would appreciate it if you liked and subscribed as well. Always helps me out. Check out the links in the description for all my goodies. That always helps me out too. That's a good way to support the channel if you're interested. And I appreciate you guys watching one more time. So remember, guys, make waves in these markets. Until next time, peace.